Welcome to Bloomberg Technology. I'm Emily Chang in San Francisco. The big four tech companies report. Apple, Alphabet, Amazon, and Facebook all reporting better than estimated quarterly results. Contributing to those beats, Google doubling its cloud sales, Amazon reporting a 160% surge in grocery orders, and Facebook reporting revenue up the first 3 weeks in July, 10% year over year. This despite a huge boycott by many advertisers on Facebook, large and small. Meantime, Apple delivering a surprise revenue boost, growing a huge 11% amid some expectations of a possible decline. The company also delaying its return to work, now setting early 2021 as a target date for the U.S. Cupertino campus. I just got off the phone with Apple CEO Tim Cook. He highlighted what was a record June quarter, record services revenue, and focused on the iPhone results, which he said were better than expected after seeing a fairly depressed first 3 weeks of April. Things bounced back in May and June. He also said the pandemic is likely helping sales of the iPad and of Macs because of work from home and remote learning trends, but hurting the iPhone and wearables. I also spoke to Alphabet CFO Ruth Porat. She talked about the fragile macroeconomic environment that Alphabet is facing. We'll get to her comments in a moment, but first I want to take a look at how these companies are doing after hours. Our Bloomberg Markets reporter Abigail Doolittle has been watching all of the ups and downs, and there are ups and downs. Abigail, let's start with Apple. What are you seeing?
Well, mainly we're looking at ups at this point in the post-market. As you know, over the last few days, it's been a little bit rocky. So maybe some of that was psychological overhang from yesterday's hearings. But relative to Apple, a massive blowout, and something very impressive here on Apple, Emily. For an adjusted earnings, they put up $2.58 per share. That's exactly what was estimated prior to the pandemic. Now, it's a 25% beat of what analysts were looking for. But again, they actually met the number before it was reduced for the pandemic. And so that's really pretty impressive. Sales were 14% better at nearly $60 billion. iPhones, as Tim Cook told you, much stronger than expected. I can say I actually bought one in April when it was weak, so I made a contribution there. But iPhones, $26.4 billion versus $21.3 billion. Services strong at $13.2 billion, very solid year-over-year growth. They also, Emily, of course, announced a 4-for-1 stock split, which could help some folks get into the stock because it will be less, even though the valuation obviously will be provided. Something that stands out here, though, a little bit, Emily, if there was a cloud, really not a big one, because again, a massive beat on a June quarter, typically not an easy quarter for them. They did not provide a forecast. Now, as you know, this stock, all of these stocks up in a huge way on the year, really above the NASDAQ 100 and the S&P 500. Valuation is high, so investors clearly buying for fiscal 2021, but we have no actual visibility from the company on that year. So a little bit of a leap of faith on the part of investors relative to valuation still, even after that massive blowout quarter.
All right. Well, I'm going to talk a little bit more about what Tim Cook told me on that call in a moment. But let's get to the other three companies. We did see Alphabet shares turn briefly negative after hours, but they are back up. What are you seeing when it comes to Alphabet, Facebook, and Amazon?
You're right about that, Emily, and I forgot about that. We did actually see Alphabet for a moment, for just a few minutes, down about 0.7%, now back in the green. Very solid results here across the board. Amazon did not pull an Amazon, so to speak. As you know, sometimes they will spend, and that will eat into profits, and they usually get a pass for that. This time they didn't do that. A big beat, net sales better. So it's very clear that they're benefiting from stay-at-home, folks really shopping online. Someone such as myself who did not used to really shop online or from Amazon at all. Now, delivery is coming almost every day. Facebook, this one is a bit of a surprise from a technical standpoint. They put up a very strong quarter, despite the fact that the stock had been wrestling with the 50-day moving average. That tells you investors, traders had been nervous going into this quarter. Ads rebounded. Something I would point out, unlike Apple, so they beat the estimate coming in at $1.80, but prior to the pandemic, investors were looking for $2.40. So again, above above the estimate on the street, but well below what we had been looking for before the pandemic, unlike Apple. And then Alphabet, Emily, this was probably the tamest of the quarters, certainly helped by the cloud and YouTube. Something I would like to say, as you know, I do look at the charts and the technicals. All of these charts still remain perhaps precarious, still maybe too far, too fast, Emily.
All right, Abigail, we appreciate all your detailed analysis of the charts. Thank you so much for breaking that all down for us. Meantime, I want to get to these breaking Apple numbers. We're listening into the call as it is underway. We've got Dan Ives of Wedbush Securities with us to break it all down. And Dan, you know, it really is a pretty big beat here by Apple across basically all of the product categories. You know, some of the devices, iPad, Mac, significantly up. What are your takeaways?
I mean, I view it as almost a jaw dropper in terms of just how strong. If you look at iPhone number, look at the China number, and then the overall results, this was something beyond best case from a bull perspective. And I think going into iPhone 12 product cycle, it's massively gasoline in the fuel tank for Apple going forward. And I think this is really a potential paradigm changer because of that iPhone number. And of course, services, that continues to be the foundation of the story.
That said, Apple has about 25% of its stores closed, mostly in the United States, some in South America. So I asked Tim Cook how that is going to weigh on the current quarter, given all of the uncertainty ahead, the virus continuing to surge in the U.S. and around the world. And he said the pandemic and the closures clearly does weigh on the results. And I'd expect it, he said, to weigh on the results primarily on the iPhone and wearables in the product business. We are not giving guidance because of the uncertainty. And Dan, this is the second quarter in a row that Apple has not given guidance. In fact, he told me they are thinking about potentially not giving a forecast no matter what in quarters ahead, and whether or not that's really the right thing to do for Apple. They did stop reporting unit sales a couple of years ago. But what do you make of what he says there, that especially when it comes to the iPhone, with stores being closed, you know, people coming into stores and looking at and feeling the iPhones is such an important part of the buying experience. You know, how big an impact do you think that will be?
Yeah, first from a store perspective, that's about 6 to 7% of sales. So, you know, overall, that's still small, but no doubt in this COVID environment, it's very volatile. And I think when it comes to guidance, it's a game of blindfolded darts in terms of giving guidance. That's why I think right now that is the prudent move, at least the next few quarters, not to give guidance. And that's something investors are fine with. And I think if you look at these numbers and you kind of do a trajectory going forward, you know, right now you have about 350 million of 950 million iPhones worldwide in a window of an upgrade opportunity, going into what I believe is the biggest product cycle since iPhone 6. And that's why there's a stock that continues to get re-rated despite the environment is there, you know, you could say back against the wall, maybe as opposed to some other tech stalwarts if you look at overall iPhone demand. And this was just something beyond best case relative to what they showed. I think it's a little preview of what we're going to really see in terms of numbers over the next 9-12 months.
Meantime, Dan, we're getting some headlines from the call. Cook talking about how excited he is about the opportunities in wearables. Obviously, he told me AirPods and Apple Watch did incredibly well, in part because of some of the trends that we are seeing with work from home in the pandemic. He's also talking about supply constraints, the iPad, the Mac facing supply constraints in the quarter. And obviously, we're expecting a big launch potentially in the fall when Apple historically has unveiled its new iPhones and new iPads a little bit later in the fall. I asked him, you know, will there be supply constraints? Will those launches be delayed? And he said we'd be hearing more about that on this call, so I'm listening for that. But what are you expecting the impact on supply and launches in the current quarter?
Yeah, I think from a supply chain perspective, that continues to sort of give them wiggle room in this 4 to 6 week period, you know, whereas opposed to maybe call it middle of September, you know, they could officially launch maybe a month later. But I think for investors, it's splitting hairs because it all comes down to the next 12 to 18 months. Supply chain, they have no control over. It's normalized a lot quicker than expected. And you look at AirPods, I mean, we're modeling now 90 million AirPod units for this year, over 65 million last year, 29 million the year before. So that's something that's really starting to become key along with services, you know, and the Rock of Gibraltar iPhone business.
Tim Cook continuing to speak on this earnings call, saying he saw elevated use of FaceTime, iMessage, Siri in the quarter. I also, Dan, want to get your thoughts on the antitrust hearing yesterday. And I asked Cook how concerned he is about regulation, given how concerned lawmakers seem to be about Apple's policies and practices. And he doubled down on some of the arguments that he shared before Congress yesterday. Also told me that he is optimistic that people will understand. He pointed out that the App Store has been a runaway success, an economic miracle. In his words, any way you position it, he says he thinks people will realize that. And I'm optimistic. How concerned are you about regulation?
They're definitely in the crosshairs. And if you look at the App Store, it's part of the crown jewel of Cupertino. That 30% fee, it's not just in the US, but also across Europe, where you're going to see more of a focus there. And I think they defended themselves pretty well yesterday in terms of Cook going in front of Congress. And I think from a regulatory perspective, it's Amazon and Facebook that's a little more in the spotlight here than Apple. That is going to come more in focus into the fall. But I think right now for Apple, they have a pretty good argument. I think investors are not really viewing that as a major risk. But I will tell you this, it's good that these tech giants did their hearings yesterday and not tomorrow, given all these results.
All four on one big day. Okay, Dan Ives of Wedbush Securities. Dan, always great to have you here to break it all down for us. We're going to continue to listen in to the Apple call and bring you highlights as we have them. Also, Alphabet call ongoing as well. I just got off the phone with Alphabet CFO Ruth Porat, and we'll tell you what she had to say after this quick break. This is Bloomberg.
The macroeconomic environment caused by the pandemic created headwinds for our business. Our revenue declined on a reported basis and is flat year over year on a fixed FX basis. Like other companies, this quarter we saw the early signs of stabilization as users returned to commercial activity online. This was true across most of our advertising verticals and geographies. Of course, the economic climate remains fragile.
Alphabet CEO Sundar Pichai there just moments ago on the earnings call. We are continuing to listen in. The company beating on sales $31.6 billion, above expectations of $30.6 billion. Profit also beating, but ad sales did fall 8%. YouTube ads only grew 5.8%. But Google nearly doubled its cloud sales in the quarter. I also just got off the phone with Alphabet CFO Ruth Porat, and she reiterated some of what we heard from Sundar there, saying the company is cautiously encouraged by the performance, but continues to be in an ongoing, fragile macroeconomic environment. And what Google is experiencing is very much about what is going on in the wider economy. Joining me now to discuss, we've got Daniel Newman of the Futurum Group. Dan, always good to have you back on the show. What are your big takeaways from these Alphabet numbers?
Yeah, I thought that the quarter was very good. The tech space as a whole has continued to be very encouraging. I mean, it wasn't a blowout like some of the others, but there was a lot of concerns with so many small businesses being impacted that ad spending would really be down quite a bit. And it was down a little bit, but I felt like Google shined, or, Alphabet shined as a whole with YouTube showing growth year over year despite the pandemic. Its cloud business has been really encouraging. I think the business grew about $1 billion from the same period last year. And this was really the worst of it. This last quarter, I know there's definitely some ongoing challenges with the pandemic, but we don't see closures like we have over the last quarter coming again. We see more economic activity, and the overall performance was good to be encouraged by. And the data shows, Emily, that despite the fact that, ad revenue for the year may drop about 5%, according to eMarketer, that the remaining 6 months of the year, the IAB is saying that paid and social activity are going to be up 20 to 25%. Which, given that Google doesn't give its forward guidance, should show some encouragement to the street that the next quarter could be better.
Now, I'd love to hear how you would compare Google to Facebook here, because Facebook is in the middle of a massive advertiser boycott and still hugely beat on revenue estimates, especially in advertising. We didn't see as much of an uplift in Google, and they're not facing an advertiser boycott. What do you make of that?
I think it's behavior, Emily. I believe we may be boycotting, and there are certain companies that are certainly pulling back, but people are spending more time. You saw the average revenue per user grow. Time people are spending, the daily active user numbers up, the monthly active users are up. And as with Facebook, the more time people spend, the more revenue is generated. And for businesses that are trying to come back, a lot of companies are participating in the boycott, but of course, just as many are not. And if companies are having success with Facebook and the platform being a place where people spend time, where messages are going out, and if people you spend time with or anything like the people I do, there's just a lot of time and energy being spent on Facebook. And I think Facebook's capitalizing on it really well. And of course, the company does, brilliant and yet arguably very invasive things with data. And that's able to be used to optimize and really get the right ads in front of the right people. And of course, Google has a similar model, but it doesn't have the same engagement model, Emily, that Facebook has. It really tends to keep users on the platform, spending time and energy, and of course, creating revenue from advertisers.
Now, I also did talk to Alphabet CFO Ruth Porat about the antitrust hearing. It certainly seems like some lawmakers have made up their minds about Google and that they could be pursuing aggressive regulation. So I asked her how concerned she is about that, and she said, "We're happy to engage with regulators as they review the entire industry, not just Google." She did point that out. All big companies are the subject of scrutiny. All the data shows consumers love our product. How concerned are you, Dan, about regulation here?
Well, regulation is important to make sure we have checks and balances. As a whole, Emily, I find the timing of putting this much energy into regulating the tech industry a little bit alarming. There just seems to be bigger things that lawmakers could be using the time to focus on. Having said that, everything from censorship to platforms, we heard about just recently on your segment about Apple and the App Store, to, giving people choice, which, like with Amazon, of course, how dominant are you in an industry? And all the companies, I thought, did a pretty good job of explaining that there is a certain amount of choice in each of the respective industries. And I feel like Alphabet, of course, really does have a huge percentage of search. But when you look at shopping and you look at retail and then you look at social and the way information is consumed, it is more distributed because people do use Facebook as search and people do use Amazon as search. So, I think these conversations are going to continue. I hope we realize right now that these big companies are creating jobs. And right now, as we're trying to make the economy come back, I think that's really important. So I hope we don't push too hard on this now and maybe come back to this when we have some more stability.
Well, we are going to be breaking down Amazon and Facebook later in the hour, but appreciate your insights there, Dan Newman of the Futurum Group. Coming up, we're going to be talking to the CEO of AstraZeneca, where they are in the race for the COVID-19 vaccine. This is Bloomberg. AstraZeneca, the latest company in the race for a COVID-19 vaccine. Our Anne-Marie Horton and Matt Miller spoke with the CEO of AstraZeneca. Take a listen to what he had to say.
We have vaccinated almost 10,000 volunteers in the UK, and we are well on our way to vaccinating 5,000 volunteers in Brazil. We may even scale up that study, make it bigger. And we also are enrolling volunteers in South Africa, where we plan to run a study with about 2,200 volunteers. And we're just about to start in the US, so we are starting in full swing in our phase 3 program.
Pascal, good morning. Anne-Marie in London here. You said you don't want to make a profit. You don't plan on making a profit from the vaccine during the pandemic. But what about when the pandemic is over? What are your pricing plans going to be?
Well, Anne-Marie, our focus right now is actually to deliver this vaccine and deal with the pandemic. And the reason we wanted to do it at no profit is that we thought, this is clearly an example of a disease that we have to tackle globally. We are all in it. Everybody has to be vaccinated and protected. And therefore, we wanted to bring the vaccine to as many people as possible around the world at a low cost. The vaccine is, on a unit basis, very inexpensive. We've set up several supply chains around the world. We have today 2 billion doses of capacity. We want to increase this further so we can vaccinate everybody. Now, when the pandemic is gone, the need for vaccine will be less, of course, and we will have to look at how we manage this. But right now, we're focused completely on the pandemic.
So you don't have any idea about pricing afterwards, and as you point out, Pascal, it's relatively inexpensive to produce, but of course you pay for research and development. This is what you do, right? You make a drug and then you sell it to people who need it at a profit. Still no idea about what the prices will look like?
Well, actually, when we're in the post-pandemic phase, our view is we will continue to provide the vaccine at very, very low cost for the low and middle income countries so that they can vaccinate their people. And we intend to make a profit, but a reasonable profit in the richer countries. Our pricing will be appropriate. It will be reasonable because we really want people to be able to get vaccinated. And definitely in the low and middle income countries, we will continue to make sure that the vaccine can be accessed by everybody.
Pascal, on both sides of the Atlantic, there's these reports about Russian hackers. Were you a victim of this Russian hack, and what impact, if so, has this had on your research?
Well, we have looked at this, and of course, our systems are very sophisticated from an IT viewpoint. We have some of the best cyber defense that you can imagine. Actually, we have a tremendous team. They are in contact with the US and the UK government cyber defense units. So we are very well protected. We haven't seen any sign that we have been hacked or in the context of this vaccine. In fact, we have a collaboration with our farm in Russia, who have been our partner for many, many years, but is also the partner of other pharmaceutical companies, US companies. They tend to do biologic agents, and they will manufacture the vaccine for us in Russia and export it to a number of countries. So we have a good commercial arrangement with them for the distribution of this vaccine, and they will be an important part of this supply chain around the world.
Pascal Soriot there, the CEO of AstraZeneca. Coming up, we're going to break down Facebook shares poised to hit a record high after a big earnings beat. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang. Facebook shares spiking after hours now, almost 7% on the back of a big earnings beat. Second quarter revenue, $18.7 billion. This appears to show that the massive ad boycott that the company has been facing over the last month has not had a significant impact on results. Joining us to break it all down, we've got Deborah Aho-Williamson of eMarketer. Deborah, how has Facebook been able to pull off this kind of revenue, this kind of beat in the middle of a huge boycott?
You know what? This is a really great question. And this is exactly why I love following this company. I've been following it for 14 years, and you just don't know, and you don't know from what to expect. But I want to set one thing straight. These Q2 results are not related to the boycott. The boycott didn't start until July 1st. And so, while a few advertisers may have started to pull back early during June, during the Black Lives Matter protests, what we're seeing now in these results is how Facebook did as a company during the global economic downfall. And it did really, really well.
That said, they do give some color on July, saying that in the first 3 weeks of July, revenue is up 10% year over year. So what do you make of that?
That's sobering when you compare it to Q3 of last year, when Q3 ended up being up 29%. But it's reflective of the uncertain state of the world's economy. And I think it's hard to read the tea leaves on what's going on with the boycott, because many of these advertisers that pulled out were only committing to pull out for the month of July. We have 2 days until the end, well, actually a day now, till the end of July. So we're going to be watching what's happening in August, starting August 1st. And I know that some advertisers have already committed to staying out of Facebook and other social platforms for the balance of the year. But at the end of the day, Facebook has millions of advertisers. And what we've seen during the quarter, during Q2 and into July, is that there's a lot of advertisers that have pulled in, that Facebook's been able to pull in, that are endemic to digital, that are somehow related to staying at home or being away from your typical activities, that have been able to advertise on Facebook. And I think that shows really the power of the company.
And just a reminder of the scale of this company, 2.7 billion monthly active users using the family of Facebook products, not just Facebook, but also Instagram and WhatsApp. The company is saying they're expecting monthly active and daily active users to be flat or slightly down quarter over quarter. What does that signal to you?
I think that signals to me that we saw a huge rise in engagement on Facebook and on Instagram over the course of the pandemic. And that, I think, we're seeing now a sign that maybe Facebook is going to be reaching a ceiling in the number of users it can add as a result of that. Snapchat said something similar last week during its earnings report, where it had also achieved pretty strong gains, but it too did not forecast as much growth. It did forecast some growth, but did not forecast as much growth in Q3. And my takeaway is that the pandemic effect is basically over for these social platforms.
Basically over. So you think that's the end of the impact of the pandemic that we'll see, even though we're still in the middle of all this uncertainty, virus resurging in the U.S. and around the world?
As far as user growth, I think so. Yes, I think that as people are not staying at home as much. They're not, housebound, shelter-bound. They're not as, there's certainly a lot of uncertainty about what you can do and the economic effects. But I think that initial phase where people were really trying to figure out how to live their lives in this new sort of weird reality that we've been in, and they were turning to social media to talk about it, to learn, to engage. I think that we saw that growth, but I don't know that we're necessarily going to see a whole lot of new growth coming on now in Q3 and Q4 as the pandemic wears on.
Meantime, Mark Zuckerberg was certainly a target at the antitrust hearing yesterday. All four CEOs had rough moments, but a lot of the ire and the tough questions were directed at Zuckerberg. The issue around buying Instagram to get rid of the competition, about copying the products and features of other services, and about anti-conservative bias. Republicans railed him on that. And it certainly seems like a lot of lawmakers have made up their minds about these companies and the threats that they pose. And I'm wondering how concerned you are about regulation for Facebook in particular.
Yeah, absolutely. And yesterday was a pretty brutal attack across the board on all four companies. Perhaps Apple got off a bit lighter, but it was definitely a pretty brutal attack on the other three companies. And it did, as you point out, make crystal clear that Congress has a lot of beefs with companies like Facebook, and they do extend way beyond antitrust into things like content moderation, bias, and censorship. Obviously, from a public relations standpoint, not a great moment for Facebook yesterday. Some of those internal emails that were published about when Facebook was negotiating with Instagram were pretty damning. But I think that at the same token, this company has shown over the years that I've been following it that it's not afraid to copy competitors and then threaten them with those copies. But not everything that it copies works out. We've seen that a few times. At the same time, it's not a surprise that Facebook is copying competitors. I mean, it's done it with stories for Instagram, where it copied Snapchat. It's doing it again right now with Reels on Instagram, which is a copy of TikTok, and it's a company that I think is really showing, in my respect, in my feeling, a lot of the business acumen. And these emails, these emails, surprisingly for a company that is so focused on 21st century messaging, what they communicate in email was really amazing to me. Just as a side note, it's quite a lot of detail.
All right, Deborah Aho Williamson, so appreciate your enthusiasm about covering Facebook and sharing your insights with us. Thank you so much for joining us to weigh in. Deborah Aho Williamson of eMarketer there, and we've been continuing to listen into the Apple call and some pretty significant developments. When I spoke to Tim Cook on the phone before going into the show, he said that they would be talking about their fall lineup on the call and whether or not COVID was impacting that. And he has now said that Apple will be launching its next iPhones a few weeks later than usual. Normally, they are launched in late September, so that pushes us into October, potentially for new iPhones. Also, he's talking about the impact that the pandemic is having on production. Apple TV Plus production has been shut down due to COVID-19, and they have not yet restarted it, but hope to meaningfully restart production soon, and that has impacted the pipeline for content. We'll continue to listen in and be back with more on Amazon's results after this quick break. This is Bloomberg. Welcome back to Bloomberg Technology. Turning to Amazon now, also crushing its earnings results due to the surge in spending on e-commerce in the midst of the pandemic. Joining us now, we've got Melissa Burdick, the president of PackView, which is a company that helps companies manage their e-commerce advertising. And she also worked at Amazon for 10 years. Melissa, I'm sure it's been interesting to watch the company from the outside as it has weathered this pandemic and been a lifeline for so many, and also weathered a number of controversies tied to the pandemic. What is your take on the latest results? What stands out to you here?
You know, Amazon is a beneficiary of COVID, and e-commerce in general has been a beneficiary. We kind of think of this as e-commerce has been accelerated by 5 years due to COVID.
Hey, Melissa, hang on. Actually, the president is walking out at the president is walking out. Let's listen in.
Mine, Herman Cain. He was a very special person. I got to know him very well. And unfortunately, he passed away from a thing called the China virus. And we send our prayers to Herman's great wife, Gloria, wonderful family. And I have to say, America grieves for all of the 150,000 Americans who had their lives taken by this horrible, invisible enemy. We mourn their loss as a nation. We mourn their loss as people that love one another. And we're working very hard to not only contain this horrible event, this horrible plague, it's what it is a plague, but also to come up with therapeutics and vaccines, and we're making a lot of strides. All over the world, they're having tremendous problems. A resurgence has taken place in many countries that people thought were doing well. Despite a wide range of approaches to the pandemic between countries, this resurgence in cases is occurring throughout large portions of our planet in Japan, China, Australia, Belgium, Spain, France, Germany, Hong Kong, places where they thought they've really done great. It came back, and in a couple of cases came back very strongly. The virus was said to be under control, but new cases have risen very significantly once again. So when you think somebody's doing well, sometimes you have to hold your decision on that. You have to hold your statement. Since the beginning of June, daily new cases have increased by a factor of 14 times in Israel, 35 times, that's 35 times in Japan, and nearly 30 times in Australia, just to name a few. These were countries that were doing incredibly well. Leadership was being praised. Latin America now leads the world in confirmed infections. And with the scarcity of testing in Latin America, the true numbers, you have no idea what they might be. And I can say scarcity of testing almost anywhere except for our country. This disease is highly contagious and presents unique challenges to our border states. Meanwhile, states like California, Washington State, Maryland, Virginia, Nevada, Illinois, Oregon, and many others, they were thought to be doing well, and they had a big resurgence and were hit very hard. And governors that were extremely popular are not so popular anymore. They were held up as models to follow, and then they got hit. And I'm not even saying it's their fault. It's probably not their fault. It's just the way it is. That's the way it is. Highly infectious, one of the most infectious diseases that anybody has ever seen. Not since 1917, over 100 years ago, has anyone seen anything like what we're witnessing now. But these states have also seen the virus substantially rebound, and again, no one is immune. No one is immune. These facts illustrate the imposing determinant, and it is a determinant that a blanket shutdown to achieve a temporary reduction in cases is certainly not a viable long-term strategy for any country. People are starting to understand the disease now. We certainly have understood a lot about the disease that we didn't have any idea. Nobody ever saw anything like this. The primary purpose of a shutdown was to flatten the curve, ensure sufficient hospital capacity, and develop effective treatments and therapies to reduce mortality. And we've done that, but it can come rearing back when you least suspect it. We did the right thing initially. We saved millions of lives. What we did the right thing. But a permanent shutdown would no longer be the answer at all. A small shutdown of certain areas, but we don't want to do that. Small shutdowns can be very helpful, but not for long periods of time. We understand what we're dealing with now, but it's a very complex situation. And I can only say, thank heaven that we are so advanced in what we're doing in terms of vaccines and therapies. We now know a great deal about the virus and how to treat it and who it targets. Almost half of the deaths come from less than 1% of our population. Think of it, half of the deaths, really a tremendous number, half of the deaths come from less than 1% of our population, those living in nursing homes and assisted living facilities. The average age of those who die from the illness is 78. We've announced very strong measures to protect those who are most vulnerable. The scientific path forward is to protect those at highest risk while allowing those at lower risk to carefully return to work and to school with appropriate precautions. I'm once again urging the American people to protect their dear family and friends and anybody who's elderly, especially if somebody's elderly and they have heart problems, if they have certain illnesses. Diabetes is a very bad one, having to do with what we're discussing. But you want to protect the elderly and socially distance. Wear a mask if you cannot socially distance, and practice vigorous hygiene. Everyone, even healthy young people, should be taking extraordinary care to avoid infecting those at the highest risk from this terrible disease. The elderly and those with chronic health issues have to be protected. In the current hotspots across the Sun Belt, the data is showing Very encouraging signs. Arizona, in particular, has crossed an important threshold. For every person with the virus, we're now seeing an average of less than one additional person infected, and the numbers are coming down and coming down very substantially. They're starting to come down in Florida. Arizona is really leading away. I was in Texas yesterday, and they're starting to come down significantly, we believe, in Texas. Need another few days to figure that one out, but it looks like they're coming down very significantly. Earlier today, I visited the Red Cross headquarters to discuss plasma therapy, which is a tremendous thing that they're looking at, and they have a lot of experience with it. Potentially life-saving treatments that infuse sick patients with powerful antibodies donated by those who have recovered successfully from this disease. More than 2 million Americans have recovered from the virus, and today we're asking them to visit coronavirus.gov, and volunteer to donate plasma. We need plasma. It's something that's been very effective, and we need plasma from those that were infected and successfully recovered, as most people do. Most people do. Plasma is one of the many promising treatments my administration is accelerating. We've secured over 90% of the world's supply of remdesivir, which is terrific, an encouraging antiviral drug that can effectively block replication of the virus. We've also approved the use of the widely available steroid, which has been very successful, dexamethasone, which has shown success even in patients at more advanced stages of the disease. On July 17th, we announced a $450 million agreement with Regeneron to build manufacturing plants and hundreds of thousands of doses of its antibody treatment, which is currently in late-stage clinical trials, moving along very rapidly. That's Regeneron. As a result of such significant strides in treatment, the mortality rate in those over the age of 18 is 85% lower than it was just in April. So in a very short period of time, think of that, just 85% lower than it was in April. It's a big statement. Now I want to provide an update on our efforts to ensure a strong economic comeback, including our negotiations on Capitol Hill. Throughout this crisis, my administration has taken the most aggressive action in history to rescue American workers. We love our American workers. And we've set records on job creation, records 2 months in a row. We enacted a $3 trillion economic relief package. The Paycheck Protection Program alone saved over 50 million jobs. We delivered $300 billion to direct cash payments to Americans. We approved $500 billion for our hardest hit industries. $500 billion. We allowed struggling homeowners to reduce or defer their mortgage payments, and we put a nationwide moratorium on evictions from federally backed properties. It was a big thing, very big thing. We also suspended student loan payments for 6 months, and we're looking to do that additionally and for additional periods of time. As a result of these extraordinary steps by the administration, we added a record 7 million jobs in the 2 months past alone. To ensure this comeback continues, which we think it will, we had great foundation to build on. We were the strongest country in the world, nobody close. We were outdoing everybody from China. If you remember, for many years you heard that in 2019 China would surpass the United States. Well, it didn't. We gained on them very significantly. We took it to a level that nobody's ever seen, 2019, and we'll be back there very shortly. It won't take very long based on everything that we're seeing. It's not going to take very long. I think next year is going to be an excellent year, maybe one of our best years ever from an economic standpoint. We can never, ever forget the people that have been lost, and we never will. We'll never forget them, never forget what happened. This could have been stopped in China. They should have stopped it, and they didn't. But I'm asking Congress to pass additional legislation to support Americans in need. First, we want a temporary extension of expanded unemployment benefits. This will provide a critical bridge for Americans who lost their jobs to the pandemic through no fault of their own. This was not anybody's fault from the standpoint of jobs. It happened. Terrible thing happened. Could have been stopped. It happened. I want to thank Senate Republicans for fighting to extend unemployment benefits today in the face of very strong Democrat obstruction, which I'm surprised at, because this is great for our country and it's great for our workers, and it wasn't our workers' fault. Second, we're asking Democrats to work with us to find a solution that will temporarily stop evictions. We do not want people who have lost their jobs due to the virus to be evicted from their homes or apartments. We don't want that to happen. Third, we need Democrats to join us to pass additional economic relief payments for American citizens, like the payments sent directly to 160 million Americans earlier this year, which was a tremendously successful program. This money will help millions of hardworking families get by. My administration is also asking Democrats to work with us to pass $105 billion to help schools safely reopen. Children are not at the lowest risk. If you look at what's going on, the younger, the better. Amazing, the immune system. For children, the lower they are in age, the lower the risk in terms of the age group itself. I tell the story that in New Jersey, with thousands and thousands of people dying, sadly dying, the governor was telling me that only one, Phil Murphy, only one died under the age of 18. That's incredible. With thousands of people that died in the state of New Jersey, one made an impact. One died under the age of 18. Children are at the lowest risk of any age group from the virus. Indefinite school closures will inflict lasting harm to our nation's children. We must follow the science and get students safely back to school while protecting children, teachers, staff, and family. We have to remember that there's another side to this. Keeping them out of school and keeping work closed is causing death also. Economic harm, but causing death for different reasons, but death. Probably more death. If governors do not want to open the public schools, the money should go to parents so they can send their children to the school of their choice. So we say if a school doesn't want to open, or if a governor doesn't want to open, maybe for political reason and maybe not, but there is some of that going on, the money should go to the parents so they can send their children to the school of their choice. If schools stay closed, the money should follow the students so families are in control of decisions about their sons and daughters, about their children. But to pass a bill, Democrats must reject the extreme partisan voices in their party. They have tremendous voices. They're looking at November 3rd, and probably a day later they'll say, let's open up the country. But the Democrats have to reject the extreme partisan voices in their party so that we can get our country going even quicker than it's going right now. We have a lot opening, and we have a lot of states that you thought were doing pretty poorly from the standpoint of the virus, and they're actually coming back very strong. This pandemic has underscored the importance of economic policies that put American families and workers first. Got elected on the fact that I put America first. For many, many decades, in my opinion, we put America last. If you look at the crazy, horrible, disgraceful trade deals that we've watched for many years destroy our country. NAFTA, we terminated it. We have USMCA now, which is a great deal, and our farmers are doing really well despite the pandemic. But we put America first, America's families first, and America's workers first. But that means bringing jobs and factories back to our shores, reducing unnecessary regulations, and creating new training opportunities for jobs and for the future. We've cut regulations at a level that no president has ever cut regulations. And we've cut taxes more than any president in the history of our country. Americans always rise to the challenge, and we will emerge more resilient, more self-reliant, more independent, and more prosperous than ever before. So I just want to thank you all, and if you'd like, we'll take a few questions. Steve, please.
Are you going to launch an effort to try to delay the election, or was that just a trial balloon this morning?
Well, what I want to explain to people, but it doesn't need much explanation. I mean, you look at article after article, New York's mail vote disaster, tens of thousands of mail ballots have been tossed out in this year's primaries. What will happen in November?